Ajay Kedia is director at Kedia Commodities, joins us now to talk about all of those cues that we seem to be getting in from the international markets there. Ajay, hi, thank you for joining in. First of all, to the crude oil prices, the sanctions on Russian companies now, and this is for the first time this seems to be happening. Now, it's not on the buyers, it's on the sellers directly. 3% of, again, is what we already are dealing with in sense of crude oil prices. Where are we going from here? Do you actually expect supply disruption? Do you think some balancing act is what we could see in the international space?
A very good afternoon, Manisha. Definitely, it was totally shocking because up till now, whenever Donald Trump speaks, they were cornering India and China that they are using the Russian oil to fund this war. But this is the first time we have seen the companies are been top two companies which are been supplier for Russian oil. So I think it may support little bit to the level of, let's say, $66, but we don't expect much upside because as per the last week's report from IEA, that clearly shows the supply would be too much as of now in regards with the demand. Even in 2026 also, we can see the supply would be more. We don't also expect prices for Brent to go below $60 mark. As of now, balance would be there. So I think a temporary bounce towards the level of $66 can be possible for Brent, but sustainability is really doubtful. Secondly, the important would be the meet between US and Russia, because up till now we have seen Russia, Ukraine, both were engaged in energy infrastructure concerns, we can say. Both war are continuously to be there. So that is also slightly supportive, but I think within a week or 2 weeks, there could be some positive statement from US and Russia can be possible, and that can drag the prices again to the level of $61 or $62.
Ajay, now to the gold prices, because we've seen a heavy amount of profit taking come in for this one, down by nearly 6% from its all-time highs. And while, of course, there is some opportunity buying that we've seen in the Asian and the European markets right now, would you say the profit taking is done with? Are you anticipating further declines here? What are you watching out for?
I think in 2025, we have already seen whenever there is a scope of profit booking, it's a tune of 10%. But we have to remember 2011 also, where prices has corrected by 38% also. As of now, nothing much has been changed in last 4 days, only a technical pullback, we can say. And psychologically, prices are holding $4,000 mark. But I think with the US, China, US, Russia, US, India, inflation data is about to release on Friday, and next week the interest rate cut. All these factors are more important. Most probably the interest rate cut which are expected is in line of expectation by next week. But important would be the data, because as of now, since last 22 years, US shutdown has been there. No much data has been available to enhance whether the December cut would be there or not. So I think a technical pullback only this is, unless and until prices re-emerge about 4,200 level mark, a support of 4,000 and below that 3,840 could be the important support. But volatility would be continue to be there for next 1 week period also. So I would still say stay away as of now because of this current volatility. Maybe a pullback towards 3,840 would be the level, or we can say fair level, where one should review and re-enter in the market.
All right, that's a big range coming in for the gold prices there. But remember, we have seen a big correction come in. And as Ajay tells us that if history is anything to go by after these very strong gains, some more correction perhaps on the lower side is not ruled out. Ajay, talk to us about silver as well. We've been talking to a lot of bullion guys, manufacturing guys as well. And they tell us not just that there is a correction in silver, but the premium in the Indian markets is completely eroded at this point in time. How are you looking at the prices moving forward from here? Are you anticipating further declines for this one too?
Yeah, even silver also, because the volatility is too high in silver as compared to gold. First of all, let us understand the fundamental side. So we have already seen the supply side concern globally and domestic were the major factor. Because of that, on physical side, we have seen silver prices touch at the level of 2 lakh. We were expecting 1 lakh 30, 1 lakh 40 kind of figure, but 170 was above our expectation. However, we still expect $72 to $74 will be the next level we can watch, but that will require at least 2 years from here, because right now supply has been reinstated. That is why you can see future and spot both are been in line as of now, what we used to see. Secondly, technically, a rally has already been overstretched. So I think a level like $40 in international is going to be a fair price over international, whereas in domestic side also drop towards 125, 126, 1,25,000, 1,26,000 should be the fair price. So still, I think pain is there in silver, but long term definitely is going to be good. But as of now, some correction more required.
Ajay, come in on the dollar index, because till time this year has seen a very, very weak dollar, and that clearly has been a lot supportive for many of these commodities. Now that we've seen a crack in safe haven, equities have continued to run up, dollar index seems to be strengthening as well. What kind of targets would you put out for the dollar?
See, I think 1st July was the important day where we have seen dollar index has tested the level of 96. Technically, that has been seen as a double bottom, because in August month also we have seen the same level. So technically, I think market has been already reacted whatever the fall we have seen since October last year from 110 level. So I think a technical pullback to the level of 103, 104 is expected by Jan end. And however, the important would be the Fed, how they will be moving for interest rate cut scenario. But overall, I think it's not like a safe haven for dollar right now. It's gold as of now, but technical pullback is expected. A breach of 100 level will trigger further buying in dollar timing, because of a data set and other currency like euro, GBP, both are been under pressure. So I'm expecting 102, 103 level by Jan. So from here, dollar index should go up.
Talk to us about the base metal prices also. And I remember our previous conversation, Ajay, when you told us that after precious metals, it's about base metal prices going higher from here. If you look at the markets today, we're looking at aluminum trading at a 3-year highs. Copper has been volatile, but holding on the higher side of that range. Between the two of them, where do you see more gains coming in?
I think this is only a start for base metal, Manisha. I think we have seen a double-digit returns, or we can say silver getting doubled in last couple of years. Even in energy prices, the volatility is quite high. But now this time, I think all three base metal would be copper, zinc, and aluminum. Aluminum, as of now, is very underrated commodity. But I think by March 2026, we can see at least in next 1.5 year, if aluminum prices get double, I'm not surprised, because the use case in EVs, like right now, lithium has been the key metal we all are using, which is around $15,000, whereas aluminum is around 2,750. So I think this could be the game changer for aluminum. But as of now, for copper, we are expecting another 20-25% gain in next couple of months because of supply concern. In dollar terms, we may see prices a breach of $10,800 can find an immediate resistance of 12,000 for copper, whereas zinc also looking very fine today on MCX. We have comfortably holding about 300 level market that can go up to the level of 340. And last would be aluminum. Slow start for aluminum as of now, because of ample supply has been there. But slowly and steadily, as copper will be rising, the replacement metal would be aluminum. Immediate target could be around 300 level by December, January. But overall, I think these three base metals should be in our portfolio for next at least 2 to 3 month period.
Ajay Kedia, thank you so much for joining in and making sense of what really is happening with the commodity prices. So Brent expected to be in a range. Gold could see further correction. So is the case with silver. But dollar index could be supportive. And as far as the base metal prices go, well, the next 2 to 3 months could give you very, very hefty returns onto that one.